Hello everyone. Welcome to another episode of Company Results Deep Dive, where this time we'll be looking into a B2B jeweler maker. Uh, the company is called Utssav CZ Gold Jewels. Posted its H1FY26 results recently. So, as you can see, this company basically designs, manufactures, and sells gold jewelry. The categories are into 18K, 20K, and 22K CZ jewelry. It's not into heavy jewelry, bridal jewelry. It's into lightweight jewelries, and they have a complete in-house manufacturing unit, starting from designing to the end product. So a brief look into the financial performance this time. So the company's total revenue increased to around 476 CR, up 67%. Their EBITDA increased to 45 CR, which is up 183%. Similarly, their EBITDA margins and PAT margins increased as well. Their earnings per share increased to 12 from 5 YOY. So as you can see, they have some good number of clients all over India. So these companies are basically the retail jewelry companies. As you can see, there are big brands out here. They are basically purchasing. They are basically one of the customers of Utssav, and Utssav basically designs and sells the jewelry to these companies. So this time, the company reported that the total revenue was uh, which was around 60%, which was up 60%, was because of both the value increase of gold price and also the volume. So volume wise they grew 25%, and value wise they found that they had got 35% increase in the gold price this H1. Their working capital, basically they had bit extended receivable days because they onboarded 70 to 80 new customers, so they had to give them the leverage. The short-term borrowing is around 125 CR, so their total debt to equity ratio is around 1 right now. But they plan to add more 50 crores of short-term working capital loans for their business right now. They don't buy gold on credit. They basically have to pay it in cash and then purchase gold. So there are no debtor days as such. Um, so their working capital days is around 70 to 80 days right now. Management basically said they are trying to expand into new product segments, which is into lab grown diamond jewelry and natural diamond jewelry as well. This is because they find that there is more margin which they can earn in these two or three categories. So right now, diamond jewelry they just started. It's around 2% of the total stock volume, but they find that they can reach a target of 200 to 300 crores in 2 years. As you can see, the margins are a lot compared to plain designer gold jewelry. So right now, if they gain around 3 to 5%, they can reach to 10 to 15% in diamond jewelry segment. As well as for the volume enhancement, they are doing capacity enhancement. So right now they have around capacity of 1.5 tons. They want to expand it to 2.5 tons. They have already got the space and hired the people for it, and they are planning to utilize this capacity from H2FY26 already. So I think from early next year we can find the total utilization of this capacity. Also, the company is planning for exports, so they are participating a lot in um, exhibitions in Dubai, so that they can basically increase their revenue. So the company has guided FY26 revenue to be at least around 1100 to 1200 crore. They have already done around 500 CR. They feel that H2 will be mostly full of wedding and festive season, so they are comfortable reaching this landmark. Their vision is to 20 for 2030 is to reach 4500 CR, which is around 5 times as of FY26, and they find that they can improve the margins with diamond segments. So the most important part right now is the top insights which Rashi Alpha has derived from the management commentary. First was that how do they counter the volatile gold prices? So the management said that they follow a simple technique right now. Say they just do natural hedging. There is no future or derivative trading for the gold which they buy. So what it means is that suppose a customer places an order today at a fixed price of say 1 lakh per 10 gram. So Utsa basically buys the gold that same day from the bank or the bullion merchant at the same rate, and then they convert that gold into jewelry and they deliver based upon their capacity. So this basically means that they are locking in the cost price as well as the selling price. So they fix their gross spread, and by this way they basically don't need to worry about any future change in gold price, either it increases or decreases. Their prices are locked in. So they don't have any exposure to price volatility for that sale. But what they don't hedge is that they admitted that they don't hedge the stock which is lying with them. So the inventory gold is already unhedged. So this means that if gold prices fluctuates a lot, then their inventory may lose or gain mark to market value. But right now, since they are working at a smaller scale, they are comfortable because the inventory turnover is very fast and there is very less risk. But I think we feel that with rising inventory as they scale up, this strategy may not be sustainable and they may have to think about some other strategies. Uh, Another point which we found out was how do they calculate the margin on the sale of finished goods. So Utsa basically charges a fixed percentage over the gold jewelry which they sell. So they have a contract with their customers. So a percentage margin is already agreed with the customers when they sign the contract. So it is not revised daily with the gold price. So based upon the order requirements, they basically charge a fixed percentage as a margin. So we basically we're trying to analyze how will the margins be increase be sustainable. Will it always have that? Will the sky will so have the capacity to increase the margin? So we find that the company believes right now that adding value-added products will rise the margin, but we feel that this upside may be capped going forward because the original retail jewelers may backward integrate to make their own jewelry directly to grab that margin. So I think what more is important here is the volume play which Utsav has to get. So I think Utsav is already trying to acquire new and new customers so that they can push in the volume, so that they are basically able to uh, gain in their margins. Working capital changes, yes, we found that the inventory has decreased, but the receivables have increased, and they mentioned the reason for that they got new customers, so they were happy to sell their jewelry on credit, but they find that it will be moderated soon in 3 or 4 months. As discussed, we found that a debt to equity ratio is around 1, but the company believes that in this type of business they need working capital loan. So they have already around 120 to 140 CR of short-term borrowing as working capital, and they are planning to increase it by 50 crores. They have already got a sanction for this for taking a loan from a bank at 8.5%. So I think to maintain this, they have to basically either shorten the working capital cycle to have the cash with them, or substitute this short-term loan with either gold metal loan with for a higher for a lower interest rate, or maybe if they gain the leverage with their customers, they may introduce cash for carry method as well, so that they don't have to sell it on credit. So overall, Utssav CZ has a very small base and has a long way to grow. We feel that the management has taken the right steps, and there are a lot of opportunities lying ahead. This is not a buy or sell recommendation. Uh, Thank you.